Welcome back to the channel, everyone. Today I want to explain what in tarnation is going on with AMC. Why is AMC falling so heavily? And why is AMC not squeezing already if Evergrande are going bankrupt or have gone bankrupt? So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, AMC's been going south since the new variant of the pandemic was discovered, but the new variant is mild. So, why have I lost over half of my portfolio? Nobody is selling, and we own 80% of the float, if not 90% of the float. So I don't really want to debate the first part of this post, as my channel isn't a political or pandemic related channel. Obviously, I talk about AMC. So I want to really simply explain exactly what's happening at the moment. So firstly, I want to start by asking you a very simple rhetoric question. What causes the price of a stock to fall? Well, there's two main things. There's the selling of a stock and the shorting of a stock. Obviously, price is determined by supply and demand. So if there's tons and tons of supply, so tons of shares being sold into the market or shorted, obviously the price is going to fall. So let's examine both of those, the selling and the shorting. So let's start by talking about the selling first. You've got retail selling, which probably isn't really happening, and you've also got institutional selling, which actually also probably isn't happening. Every single day from Fidelity and Webull, you see the inflow being much higher than the outflow. There's always 70, 75%, 80% buy orders compared to only 20, 25% sell orders. Now you might say, well Tom, there could be people out there buying only one or two individual shares, and when people are selling, they're selling off their entire portfolio, therefore selling lots of shares. But I don't really think that's the case right now in December of 2021. And why don't I think that? Well, obviously the paper handlers left the GameStop and AMC play long ago. When AMC ran up in January, there could have been many paper handlers that bought AMC back then and then obviously sold in March. Obviously, AMC also ran up in June, and therefore many new paper handlers could have got in back in June, but they would have most likely all sold in either July, August, September, October, November, or earlier in December. And therefore the actual likelihood of a paper handler still being in AMC and still holding AMC after 5 or 6 months, only to sell AMC right now, yesterday or today, is very unlikely. Any paper handlers that bought in back in June and July would have most likely been faked out either on this first dip on the 14th, 15th of July, or maybe the second dip that broke below those lows back at the start of August, or maybe even here back in September, or again here in October. If there were any paper handlers in AMC, they would have most likely sold on this break of the lows here in August, or tried to hang on for the bounce back upwards and sold here in September. And if they missed that sell, they probably would have sold down here at the end of September. And therefore the current dip that's being caused here at the start of December and right now, yesterday on the 13th of December, is not being caused by paper handlers selling their shares because, well, they had the opportunity to sell many times over the last 5 or 6 months. Guys, right now you can currently get 5 free stocks valued up to $3,500 each and be in with the chance of winning an iPhone 13 Pro and other goodies every single day this month until Christmas when you sign up with Moomoo. All you have to do is sign up to Moomoo using the link in the description below and open your account to get that first free stock. When you make your first deposit of any amount, even if it's only $1, you also get that second free stock. If you deposit $100, you're in with the chance of winning an iPhone 13 Pro and many other goodies every single day. And if you can deposit $2,000, then you also get those final 3 remaining free shares. So that's potentially up to $17,500 in free stocks and potentially a free iPhone to gift to a loved one this Christmas just for signing up with Moomoo and opening your account and making your first deposit. So now let's talk about the possibility of institutions selling. Again, I don't really think there's a huge chance of institutions selling either because they've been adding to their AMC positions in Q1, Q2 and Q3. So if institutions have been buying AMC as high as $40, $50, maybe even $60 a share, why would they be selling now for around $20 a share? Obviously, that would be a 66% loss, and I don't think any large institutions would be happy reporting to their investors that they suffered a 66% loss this year. I wanted to show the 2008 Volkswagen chart as a prime example. Now, obviously, everybody's seen this chart many times over, but most people obviously just pay attention to this massive rip from around $210 a share all the way up to around $1,000 a share. But what most people aren't paying attention to is this giant move upwards from around $200 a share to $440 a share before this giant drop back downwards to around $200 a share. So back in September and October of 2008, Porsche would have been buying Volkswagen here at $200 a share. They would have also been adding to their position at $280 a share, and they would have been buying more and more at $320, $360, and $400 a share. Now at this point, Volkswagen probably would have had a price average of around $300, maybe $350 per share. This is the same as having an average price on AMC as $30 to $35 a share. Now Porsche would have been forced to hold through these very red 2 weeks. Their Volkswagen price would have gone from around $400, nearly $440 per share, all the way to $210. That's the same as AMC falling from around $44 a share to $21 per share. But Porsche held all of their shares and did not sell any. Now, most importantly, if Porsche can hold from $440 a share all the way down to $210 a share, and then during the squeeze to $1,000 a share, then you can do it too. But most importantly, if Porsche can hold through that downturn, then obviously Vanguard and BlackRock can hold their AMC. Now, absolutely, I completely understand that BlackRock and Vanguard may be forced to be selling some of their AMC shares and some shares in many other companies because of the billions they've had to write off due to Evergrande going bankrupt. But again, we forget that institutions only hold around 30% of the legal float. That means they only hold around 30% of the 513 million shares, or around 150 million shares, which is nothing compared to the total amount of shares in existence, including all of those synthetics, because we own the float, say 2, 3, 5, 10, 20 times over. And therefore, institutions with their 150 million shares, and they may be having to sell 10 or 20 million shares, is nothing compared to the total amount of shares that are out there and the total amount of shares that are being purchased and bought on a daily basis from us retail investors. So I think we've established that it's not retail selling that's causing the price of AMC to fall, and it's also not institutional selling that's causing the price to fall. So the only other option is the shorting of AMC shares. Now, very simply, if institutions and short hedge funds are shorting more AMC, what does that mean they're not doing? Well, if they're shorting more shares, that means they're not covering their existing shorts and covering all of their shorts. And therefore, ultimately, that means that AMC play is still on, because it means these hedge funds aren't closing out of their shorts, and they've already doubled and tripled and quadrupled down on their shorts, but it now just means they're 5xing and 6xing and 7xing down on their overall short position. Something I wanted to bring your attention to is the absolute ridiculous number of short exempt shares we saw traded yesterday, with 1 million short exempt shares being traded, or 1 million short exempt shares actually being shorted. This is the highest number of short exempt shares we've seen being traded ever. Obviously, we have seen some days of 600, nearly 700,000 shares being marked as short exempt, but we were much used to seeing only 100,000 or 200,000 shares being marked as short exempt. This goes to show that the price action yesterday was pretty much entirely manipulation and naked short selling. That's why the price was dropped so severely, and that's why there were so many shares marked as short exempt. Now you might say, well, Tom, they can continue manipulating this stock maybe forever. Yes, in a way that's technically true, but it's also not true as well. Obviously, if they're manipulating the AMC stock, that means they're shorting more shares and not covering more. If they do decide to switch and cover, they will have to first cover their new shorts, which will bring the price of AMC back to $40 or $50 or even $70, and then cover their existing shorts before that, which would cause the AMC short squeeze. Now on top of this, it also costs us nothing to hold our shares, but it does cost the hedgies a lot of money. Maybe yes, they're not paying a lot in that short borrow fee, but they're paying a lot to transact and reset their fail to delivers and reset their overall naked short position. And on top of this, they're tying up all of their collateral in positions that they can't close out of, meaning that if any of their other positions dropped and they get margin called, they won't be able to meet their margin calls. So now let's also talk about that. Surely if Evergrande have now defaulted, how are the hedgies still meeting their margin calls? If the Evergrande bonds have gone from AAA rated to D for default, why haven't they yet failed a margin call and been liquidated? Now I think the main reason is yes, their Evergrande bonds have defaulted and they can no longer use the Evergrande bonds as collateral, but they're trying to get cash in the door from any other place possible. Maybe they're selling off treasury yields to get more cash for their stock position. Maybe they're liquidating their crypto positions to get more cash to meet their margin calls. Now, it'd be very, very obvious if hedgies are liquidating their crypto positions because we'd be seeing massive, massive drops in the crypto market. But as far as I'm aware, I don't think the crypto market has been falling that much recently. Oh wait, actually, yes, it has. We've seen Bitcoin down 7% over the last week, Ethereum down 12% over the last week, Solana down 20% over the last week. We're seeing Shiba Inu down, Avalanche. Pretty much every single cryptocurrency is down over the last week, other than Dogecoin because it got pumped by Elon Musk last night. This means that hedgies are pulling out any kind of cash necessary from the crypto markets in order to meet their margin requirements in the stock market. But obviously, when they exhaust all of this cash, they'll have to move on to the next thing and the next thing, or maybe they've got nothing left after exhausting their cryptocurrency money, and maybe after this, they won't be able to meet their margin calls. As Dr. Quantrillion says, covering can only be done by buying shares from the open market from those who hold them. Not even the large institutions hold enough for them to close their short positions with. Yes, the institutions hold around 150 million shares, but the shorts have shorted many times the flow over because that's why there's so many synthetic shares, and they've been shorting those shares and selling them directly to us, so they need to buy those shares back from us in order to close their short positions. As he says, retail owns the float many times over and therefore we set the price. Now something very important I wanted to pay attention to in the wider market is the US debt ceiling. Obviously, back in November, Janet Yellen said the US could run out of cash by mid-December if Congress doesn't raise the debt ceiling again. Now, obviously, today it's the 14th of December, so it's practically mid-December, and Schumer says the Senate will vote to raise the debt ceiling on Tuesday, which is today. Now, after some potentially encouraging or discouraging words from Donald Trump, it will be interesting to tune into the vote later today to see how it goes and how much the debt ceiling gets raised by, if it is raised. Now, I also wanted to talk about the upcoming Loopring and GameStop announcement, which is likely to be announced this week, potentially today on Tuesday. He said, "We know the announcement will happen in quarter 4, and this is the only week remaining in quarter 4 that makes sense." He said, "I worked at a Fortune 500 company, and I've worked at other Fortune 500s throughout his career, and he can tell you 3 things." He said large corporations often make big announcements after earnings calls to avoid the calls being taken over by the announcement. GameStop, having just had their earnings call last week on Wednesday, makes this week the perfect time to announce. He said every Fortune 500 office is virtually empty the final 2 weeks of the year as people take holiday during the holidays and burn remaining PTO. Again, making this week the perfect time to announce. And he also said that large corporations often release announcements on Tuesdays. Everyone is usually getting their stuff together and aligning on Mondays, and therefore Tuesday allows for maximum exposure through the remainder of the week. Now, even though that is obviously a bit of a trust me bro source, it does make sense. I've personally got the last 2 weeks of work booked off because I tend to take holiday and see family around the Christmas period. Now, potentially the announcement may be delayed and the platform may not be ready until Q1 of 2022, but we've not had any updates suggesting that this is the case. So far, they're still working towards a Q4 release, basically meaning this week. Guys, be sure to let me know down in the comments below what you think about AMC's current price action and why you think AMC is falling so heavily. And guys, if you want to pick up some AMC related merch like this Space Ape hoodie or my To The Moon t-shirt, be sure to check out my merch store down in the description below. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.